that the market is taking on a more bullish tone, we need to reassess some of these brutal declines. Take PVH, the apparel company you know as Calvin Klein, Tommy Hilfiger, a host of other brands. When PVH last reported 3 months ago, it delivered a pretty good quarter, but the stock had already run up dramatically. So the numbers were judged to be not quite good enough. The darn thing went into free fall. Then we started worrying about a global slowdown, the escalating trade war with China. Not good for a company that gets some of its business overseas and some parts of it, the bulk of it. We got a stronger dollar, same problem. People began to fret about the retail industry in the United States. What about the possibility of some serious shortfalls for the holidays? Put it all together and you can understand why PVH's stock has lost 30% of its value since the last time it reported. But I think the decline is, I don't know, maybe overdone. And now that the Fed has decided not to repeatedly slam the brakes on the economy, I think it's worth another look. Tonight, PVH reported its latest quarter, 7-cent earnings beat off a 314 basis, basically slightly weaker than expected revenue, up 7% year-over-year, solid guidance. While Calvin Klein was tepid, up 2%, Tommy Hilfiger was on fire, up 11%. Quarter wasn't perfect, but given how far the stock has fallen, I've got to believe that these numbers are going to start attracting buyers. Let's take a closer and deeper look with Manny Chirico, the chairman and CEO of PVH. Hear more about the quarter and the company's prospects. Mr. Chirico, welcome back to Mad Money. Thank you, Manny. Have a seat. Thank you. Well, Manny, you have always been candid. You've come on in good times and bad times, and I know the stock is trading down, but I think it's trading down, frankly, because you called out right at the top that you were disappointed with Calvin Klein with the Halo business, which I think is some really nice-looking clothes, higher designer clothes, and with Calvin Klein jeans. And I think that's what people decided to focus on.
Well, you know, Jim, I think when you look at the strength of our business is that we're a portfolio company, diversified business model. You touched on in your opening about the strength of Tommy. The Calvin business, and I think you really have to look at it on a 12-month basis, the last 12 months, the business on the top line is up just about 7% for the year, and earnings are up 2% for the year. So we're disappointed with the operating margins in the business, and they've been negatively impacted by the two issues you talked about. Our jeans business, I think we've gone from a fashion point of view and an elevation point of view too far, too fast. Raised prices going into this market, and I think we'll adjust it as we go into the spring season. But, you know, on a relative basis, every other piece of the Calvin business really performing very strongly for us.
Well, these are fashion issues. I remember when Lulu had a fashion off issue, the stock got cut in half and then it doubled. You get the fashion right, people come right back. We have nothing structural with jeans because I know what VF's doing. They seem to have gotten tired of the jean business.
Well, look, I think there's totally different things. And Calvin is a $9 billion global brand on a retail basis, and jeans represents about 10% of that volume. So it's not a jeans brand. It's a brand that sells jeans. It's a much bigger intimates underwear business, much bigger men's and women's sportswear business. So it's not a function of the jeans business, but we have to be honest about it. We didn't get the fashion right in jeans, and we're making those adjustments as we go forward. And I think when you look at the business, our operating margins year over year are down 70 basis points, and that's what we're projecting for the year. And we're highly confident as we go into next year that we'll raise operating margins next year 75 to 100 basis points. So we feel it's a moment in time. We have some challenges in that business, but we really think that there's nothing fundamentally wrong with that brand. I mean, just look at the top line growth. Right. That brand has got great consumer recognition, and we see significant growth opportunities.
But Tommy Hilfiger is really on fire.
Absolutely.
The numbers were amazing. Where's that strength coming from, and can it continue?
Well, you know, it is really coming from everywhere. Internationally, we continue to see strong growth. You know, I'm hearing people talk about a slowdown in Europe.
Yes.
We're not seeing it at all. The Tommy brand had a very strong international double-digit earnings, top-line growth and earnings growth. In the U.S., mid-single-digit top-line growth and double-digit earnings growth, so really high margins. And for both brands, Calvin and Tommy, Europe continues to be very strong. And we're off to a great start in this fourth quarter as we've gotten into the black.
Well, tell us about that, because, you know, all the ones I like, you know, what Gannett's doing at Macy's, what Michelle's doing at Kohl's, the stock's down today. I mean, everyone's kind of given up on these. But should we give up on them? You've got some good read on them.
No, I think when you look at what's happening with the business as we've gone into the fourth quarter, weather turned colder. And, you know, Black Friday, that whole week was just very strong for us in particular. And then as I look at retail, based on what I've seen, I think some of the players you talked about are very happy with their results as they've gone into it. So we're pretty bullish about how we are. I think we're conservatively planning the fourth quarter. So we have a real opportunity to outperform the fourth quarter guidance we've given.
I thought there was an interesting stat you gave on the release about Heritage. Wholesale really, really strong. Is that direct to consumer?
Some of that direct to consumer, and some of that also just through our department store channel, which is so much bigger. Very strong. I mean, particularly our dress shirt and neckwear business continues to do very well. And our Izod sportswear and Van Heusen sportswear business is, I mean, just off the charts, and some significant marketing campaigns going on.
I know, I like the campaigns.
With the Green Bay Packer quarterback Aaron Rodgers for Izod, and with Van Heusen with the UFC and what we're doing there. So it's really been making a connection, working really well for us.
Talking about sourcing, because, you know, we're all concerned about China. G20, I think it's going to go not that great in terms of what would happen to you. 25%, tended to go to 25%. What did it mean?
Well, for us, look, fortunately, at this moment in time, the apparel's not pulled into this tariff, but it's the next $250 billion, and a lot of posturing on both sides going on. Competitively, I'm not going to say to you if tariffs go in, it won't be painful for us, but on a competitive basis, about a little less than 20% of our U.S. production comes from China. And given that over half our sales are outside of China, it represents about 7 to 8% of our cost of goods sold overall China for the United States. So I think we're a big company, so that number is not small when you translate it. It's $70 million of tariffs that we have to deal with. But I think what we're hoping for, whatever comes, however this plays out, we're hoping that there's a little bit of lead time to react.
Well,
we don't go into, we're not sitting here in January raising tariffs January 1st.
I mean, you've been adept at selling. You can go to Cambodia, Vietnam. You're world traveling, right?
We just we need some time. So you don't move supply chains overnight. You'd like to get a 6-month window, and also to be able to react. Look, the unfortunate thing about it is, who's going to be hurt by this is the consumer. We have to raise prices to make up for a 25% tariff. So that balance and how we try to do that intelligently, I think some lead time would help in that whole situation. Hopefully, that situation resolves.
Okay, thank you so much to Manny Chirico, Chairman, CEO of PVH. Stock's down too much. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.